Hi there everyone, Sean here. Welcome to this issue of Questioning Money, a newsletter taking a closer look at how money works and how it affects the world around us. Today we're going to focus on gold. We've all heard of gold. We know that it's been around for a long time, but who cares, right? Isn't it just some shiny metal that we dig out of the ground? Isn't that pointless? Why would you or anyone want to own gold today in 2020? Well, there are a few reasons. Gold has a history which dates back an extremely long time. The first evidence of gold being stored is from 40,000 BC in Paleolithic caves. More recently than that, though, it was the ancient Egyptians who were the first major society to have a clear record of valuing gold. The Egyptians believed gold was the flesh of the sun god Ra. So the history of gold is long. Gold has been valued for over 5,000 years. As of this video, the US dollar as its own currency has only existed for 49 years. Before 1971, when the dollar was on a gold standard, gold was the national currency of the United States. While there were dollars in name, dollars were really just a paper proxy for gold. So, what makes gold a good form of money? Let's discuss rarity and scarcity. Rarity is the degree in which a good exists in limited quantity, while scarcity refers to how difficult it is to actually increase the supply of that good. Let's compare gold to copper. Copper is currently priced around $5,000 per ton. If the price of copper skyrockets because of some random demand for copper, copper miners are easily able to mine more copper to meet the increased demand, because copper is an abundant metal. It's not rare at all. Since copper miners can flood the market with as much copper as they want, prices eventually fall because supply can meet and then exceed demand. With gold, this doesn't happen. If suddenly people want more gold, miners can't easily mine much more. This is the fundamental value property of gold. You can't increase the supply at will. This is scarcity. Part of what makes gold valuable today is exactly that it has been valued for so long. There is a lot of gold above the ground already. Humans have been mining it for at least 5,000 years. That means that even though now mining technology has significantly improved and we're mining more gold than ever, the new increase in the supply of gold is consistently less than 2%, which is a very low supply inflation rate. The US dollar is much more like copper than it is like gold. It is neither scarce nor rare. We have the equivalent of one miner, the Federal Reserve, who can flood the market with more dollars whenever they want. Let's think about this scarcity aspect more. With the dollar, the Federal Reserve aims for the USD to devalue by 2% per year against the Consumer Price Index. This is price inflation, though, against a specific basket of goods. It's not the money supply inflation. The Fed has to increase the supply by more than 2% in order to get prices to rise by 2%. In June 2020, the Federal Reserve created more new money in that 1 month than was created in the first 200 years of this country's existence. It's really the new creation of money at all that devalues the dollar, even if it doesn't lead to direct CPI growth. The dollar's still losing value, it's just not going towards this specific basket of goods. All the new wealth that's been created over the last 50 years has made it so that you can't really store wealth in dollars, as I've talked about in previous issues of the newsletter. The dollar itself, meaning not stocks or investments, the actual dollar, is not a good way to store value. Gold is simply a better store of value than the dollar. As an example, we've all heard that the price of college tuition has been growing too fast. Over the last 50 years, college has become completely unaffordable. If you look closer, though, the price of college has really only grown in dollar terms. On the website pricedingold.com, there's a chart that shows the price of college tuition at Yale priced in grams of gold. When you look at the cost of college priced in gold, a scarce money, you can see that when using gold as your base currency, the price of college tuition is actually not near its all-time highs. In fact, if you are looking from 1960 on, tuition is actually cheaper on average than it has been for the last 60 years. What am I trying to say here? Well, The dollar is a bad store of value. If you want to store your wealth over time in dollars, you can't do that by keeping your money in the bank. Saving is penalized through inflation. You need to find some way to make that money grow. When you have a scarce money, like gold, the form of money in itself is the way to maintain your savings. People often discourage buying gold by pointing out that investing in the stock market over time has netted a larger annual return than by just owning gold. I don't like this comparison though, because I don't believe that gold is really an investment. I understand that it can be thought of that way, in that they're both places to put your dollars, but gold is really a base layer currency, like the dollar or the euro. You aren't investing in something like a company that's supposed to grow. You're choosing to store your savings in a form of money that has better wealth-storing properties than the dollar. In this way, owning gold should be thought of more as an alternative to keeping money in a savings account as opposed to your investment portfolio. Gold should not just be thought of as a hedge against reckless monetary policy the way that it usually is today. Gold instead should be thought of as a money for saving, where you can store your wealth over time instead of having to invest it if you want to maintain your purchasing power. Americans have the privilege of mostly being able to operate in just one currency, but I think that's mostly foolish, because the dollar will continue to lose value over time. Really, dollars are a currency that are good for spending, and gold is a currency that is good for saving. And that is all I wanted to cover in this issue of Questioning Money. Gold isn't just a rock, or something that we dig out of the ground because we always have. As a currency, there are some things that gold does better than the dollar. And understanding that is important if you're looking to broaden your knowledge of how money works. So that is all for this issue. If you like the newsletter, please subscribe to get it emailed to your inbox every Monday. You can find me on Twitter @SeanCover, and thank you for listening. I'll talk to you all next week. Take care.